What's up, guys? Welcome back to the channel. I want to give you guys my trade of a lifetime. All right, so I found this a few years ago, and I was like, this is interesting. Also, a pitch that we're only going to see one time within a lifetime. Arguably, though, I'd say my parents might see it twice, so I'm a little envious of them. Dad failed to play it on the first one. Hopefully he doesn't mess up on the second one. And that is the gold to Dow ratio. There are points in time, 1860, 1933, 1980, where the Dow to gold ratio is 1-to-1, meaning an ounce of gold will buy you an entire share of the Dow. So like 30 of America's best companies, think Caterpillar, Apple, Coca-Cola, etc. Those guys are in there. The companies change, the weighting of them changes, but ultimately, the Dow 30 is like America's biggest and best corporations. And for a long time, 150 years, it's been a pretty decent place to invest. It's a very consistent place to invest. And it's gotten a pretty good return. However, at this point in time, the Dow is above 30. Gold is under 2,000. Literally, it's like 15, 16, 17 ounces to the Dow. So what history would tell us is as these cycles play out, we should see the Dow go down in price and we should see gold appreciate in price until they become a 1-to-1. What history also tells us is at that point in time, there's typically a capitulation where people move out of the gold asset, not saying that they were in gold, but the Dow starts to turn around and starts to regain value once again. And so the way that you would play this is if you had owned a share of the Dow this year, right? Things were 33,000 at the peak. It's producing $833 in passive income, at least it did last year. And so the way that you would play this is you would, just buy gold right now at $2,000 an ounce, and you would just wait, and then you would trade it out. Now, at that point in time, everybody's going to be kind of panicking. Like 1980 is a rough time, like 1933 is a rough time, like 1860, like rough time. Like it's not going to feel like it. But if you trade your plan, and your plan is, when I see a 1-to-1 ratio, I'm trading one for the other, that would be like how you do it. The real way to supercharge this play is to go from silver to gold to the Dow, provided you had enough time. Here's what I mean by that. The silver to gold ratio is 1-to-90 as of present. This is August of 2022. It's historically in the US been about 1-to-40. At some points it's been 1-to-20. The US currency used to be 1-to-20. A 20 was a gold piece and a dollar was a silver dollar. So 1-to-20, 1-to-40 has been the historical ratio. We could call it 1-to-50 for ease, but essentially silver is at least half undervalued from where it should be based on its relative value to gold. So at some point in time, the gold to Dow ratio could just equal each other, and that's the trade. But if we have enough time on the scale, and it would seem that we do, given the differences in points, 1933 to 1980, 1980 to 26, 1930 to 2030, 32, somewhere off in that range, right? We should see it sometime in the next 10 years. The play that you could do is not just buying the Dow for $2,000. The play that you could do is buying silver right now at like $20 spot, and then exchanging it for gold. And if you were to exchange it at a ratio of 1-to-40, well, you'd basically be buying gold for like $800. So that is a serious possibility where you can just buy silver right now, every 800 that you stack in current dollar terms. Theoretically, you can trade it for an ounce of gold, which you can then trade for the Dow. So if we were to run this out, you made passive income last year in the Dow of $833. This year, you could buy silver. If these history cycles in history repeat, this year you could buy silver for $800. Trade it for gold, trade it for the Dow. Now, at that point in time, you might not get an $833 passive income because things are going to be rough, right? Or maybe it'll, who knows where it's going to be at. But in theory, if that play worked out, you could go from silver to the Dow passive income, meaning every dollar you save right now, this year, 22 and beyond, every single dollar that you can save in silver, if you make that trade, will be passive income moving forward. So it's like, that's a massive play. I mean, a large part of my income at this point in time literally goes to silver, because that's what I want to do. Everything that I want to have in passive income in the future, I have in savings today, and my savings is in silver. If you want to learn more about silver and gold, look at options, premiums, things like that, please contact me below. I'm a silver and gold broker, and I would love to be able to talk with you more about it. But if nothing else, just get down to a local coin dealer, find a place that you can get it. If you must trade at paper, like if you must be in paper to make that play, and some people argue that that would be the way to go because you could trade it quickly at that moment in time. I would argue 1860, rough things happened. In 1933, rough things happened and they shut the banks. 1980, it looked like all the banks were gonna fail and close as well. So I don't want my money too much in the banks. I'd rather it physically in my possession, but all those options work. And that is a trade that whether you go through my brokerage or anywhere else is a trade that I definitely think that you should make. And hopefully this time, Dad, hopefully this time you don't miss that pitch, because that pitch is definitely coming. Thank you guys for being here. I'll see you guys down in the comments. Please give this video a like, and where necessary, please share this with a friend that we get a lot of value out of it. See ya.